Del Pre, Executive Director of the Arizona Real Estate Investors Association. We've been representing and supporting real estate investors throughout the state of Arizona since 2002. Our mission is to provide knowledgeable local market conditions and knowledge and support and education and networking opportunities to all real estate investors. And we'd like to bring experts like Oggie in every week, every month to our meetings to support and assist you within your real estate business. As you can see in the bottom of the screen, we have all our social media handles. So outside of email and Zoom and personal meetings, you can connect with us on Twitter, Facebook, Instagram, YouTube, our website, all the above. So we'd love to see you on there. Just a couple meetings we got coming up here. Every month, we have what we call our monthly meeting. Our monthly meeting is a bigger event. It's on the second Monday of every month. We always have networking opportunities. We have a trade show with all our business associates. Attorneys, lawyers, insurance agents, property managers, anyone that you need in your real estate business is here at that event. So meet the other members, build relationships, meet our business associates, which is your team. Then we also do an in-depth market update. We have every other month, we have Tina Timboard from the Cromford Report coming. We have Sarah Perkins from AZ Market Data. I forgot the website. I'll have to get that. But she comes every other month as well. So we go in depth on the market update, so you know where we've been in the market, where we are, where we're going. So you can use that information to adapt for your business. So definitely check out the market update. And then we also have an educator on a specific topic every month. So Monday, September 12th, the only event we hold outside of our headquarters is at Venue 8600. The second Monday, September 12th, we'll have our main meeting, and our special educator is a national educator. He's coming into town to discuss apartments and multifamily investing with Anthony Chara. So from there, on the second Tuesday of every month, we drive down to Tucson. And we do the same event, right? Same style, same information, just it's all based on Tucson, on the Tucson market. Anthony Chara will be coming to Tucson as well. And then our event that we'd like to go a little bit more in depth and more personal is the Phoenix Real Estate Club. This is on the fourth Tuesday of every month. Okay, so at the main meeting, we throw a lot of information at you. You learn from the associates, you learn from the market update. But what we like to do is say, hey, let's take that information. Let's come on the fourth Tuesday to our headquarters here in Central Phoenix and meet at the Phoenix Real Estate Club. So what happens at the Real Estate Club, we take a few minutes and we go over all your real estate deals. Everyone gets the opportunity to stand up or to share what kind of deals they're participating in today's market. This is a good way for you to get insight to see what's working. We do power networking. We break out into groups of 3 or 4. Bring your need for your business. What's your problem? Because you're being a group of 4 people that have experience in real estate investing. You get to be able to share your situation. Hopefully we can, allow you to solve that problem, as well as build new friends and business relationships. We also do the haves and wants, where you get to stand up if you'd like and let's let the whole group know what you have for them, or what, maybe you have a property for sale, and what you want, right? So what do you need for your business again? Do you need an electrician, contractor, attorney, or what kind of help do you need within your business? It's the time to connect the dots. And then, like I said, Molly comes on, does a small market update, and then we have a discussion. So we like to pull information out of our members. I think there's a power within our community. We're all in the trenches. We're all doing deals, lending money, buying houses. I think the information that we can share with each other at this meeting can give us some in-depth insight to the market. So I'd love to see you at all these meetings. Subgroup meetings, these are based on every specific strategy. So you can see fix and flip, shared housing, landlording, Tucson Prescott, we have meetings as well, raising money, notes. So we have all types of sub meetings that you can attend. And we have subgroup leaders that host these meetings. They all have 5 years minimum of knowledge and of the business. They're active in today's business here in Phoenix, or Tucson, Prescott, wherever they're at. So they take 2 hours out of their month to hang out with us here at the office. discuss that specific strategy, answer your questions, and provide a place for everyone to get to know each other and network. So check out our calendar, azreia.org/calendar, to see what may fit for you. Once again, just bringing Anthony back up and how it kind of works at Azreia when a national speaker, which we do about 5 to 6 times a year, when they come into town, this is how it kind of rolls out. So Monday and Tuesday, like I said, they go to their main meeting, Phoenix, Tucson. They give their hour presentation or so about their specific subject, which in this case is multifamily investing. Then what we do is Anthony will invite you to a Wednesday meeting, which is September 14th. For this case, it's 2 hours. It's at our office, and he takes a deeper dive into the multifamily business, right? So basically, we're going to be talking about analyzing multi-unit deals on that Wednesday night. And if you like that Wednesday, you don't have to go. But if you just want to go to the full day on Saturday, he's coming back the following week, Saturday, September 24th, full day, 9 to 5 here at the Azreia office. And he says, just go deep into how to grow wealth in apartments. So next month, all about multifamily at our meetings. So once again, just always go back to our schedule, our calendar. Then we have the Launchpad. So Launchpad group, we do this every other month. This is for investors that are just getting started, trying to figure out where to go in the business, right? I'm personally, my experience when I got started, right? The shiny object syndrome, you're trying this, you're watching this. There's educators putting out all these cool ideas. But then after a year goes by, you realize you might not have done nothing. So we want to put an optimal plan together for you. We created a 4.5-hour class here at the office. We're doing this upcoming Saturday, August 20th from 9 to 1:30. We're going to go over these objectives, these 8 objectives. You will get a workbook and you will leave the class with a mini business plan that you could participate in and take action. Okay, you have to apply the information that you're learning, the books you're reading, the videos you're watching, the classes you're attending. We're going to put all that into a plan, and you're going to have something to walk out and execute. So we're going that Saturday, August 20th, $30 for Azreia members, $100 for non-members. Ollie's going to put a link in the chat for our self-assessment, because on the front page of our website, we do entrepreneurial self-assessment, where it kind of, if you have no idea where you're going, should you be active or passive real estate investor, we have about a 15-minute questionnaire that you can take to help you decide which route you should go. Take the assessment, know that you're going to be active, for example, then come to Launchpad, build a business beyond becoming an active investor, maybe fix and flipping, wholesaling, whatever it may be. So once again, take the assessment, check us out this Saturday. What else do we got coming up here? Steve Trang sales training is coming up. Actually, this is tomorrow, right? Yep, Thursday, August 18th. It's a day and a half sales training. It's going to show you how to close more contract, speak with the homeowner, right? How do you engage with them? How do you build rapport? How do you talk to them? How do you get more contracts closed so you can close more deals, make more money? Steve is a professional. He pioneered the sales training for real estate investors. We will also be putting a link inside the chat so you can check out and learn more about that class. And remember, anything you would do with Steve Trang, if you put the Azreia coupon code or use the Azreia link, you will get a discount on everything he offers. Azreia show, this has been going on about a year with my co-host Marcus Maloney. We just wrapped up an episode last week with Jack Bosch, the land flipper. So if you go on all podcast platforms, Spotify, Apple, Google, YouTube, you can watch any of our episodes. Oggie's on there as well. I have to pull out the maybe what episode number that was. So Molly, if you or Rosa can help me out and figure out what number that was, so we can let everyone know. Because after you learn from Oggie today, you're going to want to know more about him. So I highly suggest watching the podcast as well. As a member of Azreia, right? So like I said, we're a resource for you to support your real estate business. We have one of the best nationwide discount programs in the country with Home Depot for specifically being an Azreia member. You get 2% off all your purchases twice a year. Okay, so everyone has a part of it, whether you're a contractor, trades, real estate investor, landlord, fix and flipper, you're doing Home Depot runs. Whether you like it or not, it's happening. So why not get 2% back, 20% off liquids, 20% off your cabinets, appliance programs. So, you want to hook up your Home Depot Pro account with Azreia to start getting that discount immediately. So if you want to become an Azreia member, if you're new with us here today, $100 a year is our membership due for the basic plan. If you're not going to be highly active, you're supposed to be low active, 5 to 7 meetings a year, it's going to cost you a la carte $5 per meeting or $10 on the bigger meetings to attend. Otherwise, and you get access to all benefits. However, if you're going to be highly active, you're going in full throttle, you're hitting the gas, and you're going to everything, $239 a year. Everything else is free. So all the subgroups and main meetings will be no charge. So we'd love to have you as an Azreia member. From there, thank you for your time listening to that. We have our special guest here today at the Not Another Lunch and Learn, which we do every Wednesday at 12 o'clock here on Zoom, Facebook, and Instagram. So Oggie, man, it's all yours. Tell us who you are, what you do. How do we become bankable? Show us how to make more money in our real estate business.
Oh man, thanks for having me first. I've been a long time member of Azreia, and now I'm as a vendor also with our property management company. So, and I'm a real estate broker, having my license 12 years now. Oh, sorry, 17 years now. And I guess I specialize in everything residential real estate. Mm-hmm. I don't do much commercial. The commercial I do is multifamily. That's the only thing I know. So I'm trying to kind of stay away from commercial. But I have good friends that help me with that. So I do retail real estate. We own property management company. We have an investment company that we buy in hotel properties throughout Arizona. And I personally invest in deals. I like buy and hold. I am trying to stay away from fix and flip. For me, fix and flip is a job, and I already have one. I actually have multiple, so I don't need any more. And lately, the contractors have been driving me crazy also, so I think you can relate to that too, right? But when you called me last week and you said, hey, let's do something, and I was like, okay, let's see what is going to be beneficial for everybody. And now that I am considering the situation in the market, this is what I think is happening, and this is what's going to happen. In the last year and a half, I personally haven't bought anything to rent, to keep in my portfolio, because it was expensive, super competitive. It's so hard to get a deal. And I'd like to get my deals with 20, 25% equity right from the back. Okay. But market is shifting, and that's what's happening right now. And for the next 6 months, we're going to know where this thing is going to end up. So I personally am not buying and holding anything until at least January. I want to see where the interest rates were going to go, where the prices were going to go. But my prediction is in the next 2-3 years, it will be a good market to start buying again.
Love it. Okay.
Yes. So why not we start talking about it now and help everybody get ready for the right time, not right now. So, of course, I like buy and hold. So let's talk about buy and hold properties. And for buy and hold, the problem is you need to have a lot of money, to put down payment. And then if you don't have the money, you have to go to a bank, get a financing. So all these things, unfortunately, it cannot fix overnight. If you don't have the money, it's not easy to put them together. If you're not financeable, it takes months, years to get that ready also. So that's why today I wanted to talk about being bankable or becoming bankable, which means when you walk in the bank and say, I'd like to borrow $1 million, they give you $1 million to buy a rental properties. So, which even if you're not ready, it will give you some ideas how to get ready for what's coming in the next 2-3 years. Be ready.
Because it takes time, right? Because like, so going into becoming bankable, like, for example, I think our conversation we had a while ago is I wanted to get a HELOC on my house, and I went to Bank of America. I started submitting all my documents, tax returns, and they just, in a way, ghosted me, man. They're like, I'm like, yo, where's the results? Are you supposed to have my answer if I qualify? And they're like, we don't understand your tax returns.
Oh my
'Cause
God, that's most common. That was one of the first thing that I fixed. So my long-term mortgage guy calls me and says, "Listen, your tax returns are 500 pages, and if we start giving these tax returns to the underwriters, they'll be
Mhm.
so confused, and it is going to be so hard to explain to them." So he's like, "Why don't we restructure your whole legal thing and move some properties around, and this way we can restructure the taxes, and instead of giving 500 pages, we're going to go and give them only the K1s and the W2s that you get as profit and leave everything out. So this way the underwriter gets only like 15 pages, and based on the 15 pages, they decide if they're going to give you a loan or not." So that's what we did. My accountant didn't like it because he had to spend whole day restructuring the whole tax returns and legal side of it. But practically what I was doing, I was reporting all my profits from my individual rental properties to me and my wife as K1s. And that
Mhm.
created a lot of paperwork, once you start getting over a dozen of properties, in the 14, I have 14 now, but they keep coming, and it's a lot of paperwork coming. So what we did is we just structured everything to report to one holding company, one LLC.
Can we go back? Just let's take a step back, because like what happened to me and what you were doing. So let's just say you're a real estate investor. You're looking to buy, your first few properties or over time, or you already have a few properties, whatever it is. You usually have them in each in an LLC, right? You might have a
Correct.
joint venture partner on there, or you might own them solely. Then, so when after that rental property makes money all year, you get that LLC issues a K1 to you personally.
Yeah, K1 says what's the profit of that specific company or LLC.
So now you have five. Someone has five properties. You have 14. So now you got 14 K1s flying to your personal life for your tax, so you can file your taxes. And now the underwriter has to look at all 14. Is that correct?
Exactly. And you have depreciation schedules, you have all these little things that comes, and it just creates an enormous amount of paperwork. And he takes a specific underwriter that understands these things, and it's just, you cannot risk it because it's too, you just have to do a little extra work, get the right people so you can structure properly. So that's one of the bankability, is to be structured properly with your LLCs, how you get your profits and how you get your salaries, how your depreciation is calculated. So everything is really organized. So when you hand it to a bank, it's very easy for them to make a decision pretty quickly.
Awesome. Yeah, so that's that's what you mean by being bankable. Because when we throw 500 pages, like you said, at them, it just gets overwhelming. They don't understand it. They even
Yep.
want to know about your business partners in these other LLCs, and they want paperwork from them. It just gets crazy. So let's talk about how. So let us know how do we get started? How do we start getting organized so we look good on paper for the bank?
So just again, everything that we're talking about here, it's not a legal or tax advice. This is, we have a conversation just based on our experience. So
Yep.
everybody should check with their personal tax advisor or legal advisor to make sure that the things we're talking about here applies to them. So the way the way I'm structured, I have, in order to be easy and bankable, easy to bank to understand and get my profits, is on top we have holding company. It's a simple LLC that it's a partnership between the two spouses. Me and my wife, we're partners. And the top LLC on the top, the holding company, owns all the LLCs, which Each LLC owns one property. So the profit from each rental properties, it's reported on the holding LLC. And that holding LLC issues one K1 versus issuing 14 individual K1s, because the holding LLC owns the other 14 LLCs, and all the profit gets reported to the holding company, and the holding company issues one K1. This way, when you go to the bank, you don't have to give them 14 K1s, you give them just one.
So when you give that one K1 from the holding company, are they asking for like bank statements from all the LLCs, or do you think they'll just want a big, like, because does the holding company have a bank account of some sort as well?
The holding company has a bank account, but they don't ask about anything else. They just want to see the K1s, because that's how you report on your tax returns. The other 14 LLCs that you have, they're considered pass-through LLCs, which means money goes through, but they're not reporting any profit. The profit is reported on the ownership, on the owner. So that's how, because you report the same thing on to IRS, and that's how you report it, give it to the bank, they're okay because it matches. So it's not like you're reporting 14 K1s to the IRS and then give one K1 to the bank. Then it's going to be a problem. It just be consistent.
All right. So if I can just throw in there, so what, right, we're talking about an LLC for each property, right? So you want to go into just briefly, like, why do you do that?
So the LLC is just, the only thing is liability. So reduces liability. In Arizona, it's pretty cheap to have a LLC. Like in California, it's more expensive. So it doesn't, sometimes doesn't pan out to have 14. But everything comes to how much equity you have into the property. If you have to combine multiple properties in one LLC, try to combine them based on equity. So if you have one LLC and one property has 200,000 equity and the other one has another 200,000 equity, don't put these two properties in one LLC because there's a lot of equity. Pick one that has 20,000 equity and one that has 200,000 equity. This way, if something happens and it appears and they have to do judgments and collect, they can collect only on a certain amount of equity if you have to combine multiple properties in one LLC. I do one per LLC because it's cheap in Arizona. It costs me, you can do it yourself for $150 or hire somebody for $650 to create an LLC. After that, it's nothing. You don't have to pay anything yearly. So it's good. When I create the LLC, again, they're pass-through LLCs. And I have another LLC that, all right, it's getting a little complicated, but so all the LLCs are owned by the holding company.
Okay.
But the money from the LLCs do not go into the holding company. The holding company owns another LLC that it's management LLC. So the management LLC collects and pays all the bills, collects all the rents, and pays all the bills. And the management LLC hires the property management company that service the actual property.
All right. So let me follow. Holding company.
Yes.
10, 14, or however properties you own, all under an LLC, all properties owned by holding company. And now you're saying there's another LLC that represents the holding company.
Yes.
And that's
all the rental agreements, all the property management agreements, they're with the management company, not with the holding company. This way you have 3 levels of separation. That's one reason. And second reason is for just bookkeeping purposes. Imagine if you have 14 bank accounts, collecting 14 different payments for 14 rentals, it's going to be an accounting nightmare.
Yeah.
So when you have one account that all the money goes in, all the money goes out, your bookkeeper is going to be much easier to keep your books in order.
So that one LLC that is ran by the property manager, so all 14 of your rental income goes to that LLC.
Correct.
Then that LLC disperses to the individual 14. So your 14 tenants, they all pay to one LLC
yes.
first, then
Yes.
it dispersed to the right bank accounts afterwards.
No. The
No?
14 properties, they don't have bank accounts. The 14
Okay.
LLCs, they're pass-through LLCs.
Okay.
Only the holding company. So if you have any profit, goes up into the holding company.
Got it.
So the LLCs, the best thing is to be completely passed through and not even have EIN number. That's the cleanest thing for the IRS. So you don't have to report. So you can have a LLC. You don't need like EIN number. You don't need that. And if you don't open a bank account, it's even better. Completely pass through. That's it. Only legal entity to hold the title.
And that one LLC has an EIN though.
Yes, the management LLC has the EIN number because it has to cash checks and it has to have bank accounts. And the holding company has an EIN number because you need to have a bank account to receive the profits from your rental properties.
All right, I'm following.
So,
I'm taking.
So here's one trick that you need to know about the holding company. That's connected to the being bankable. It has to be a partnership between you and your spouse. And because Fannie and Freddie, they give you up to 10 mortgages. After 10 mortgages, they don't like you anymore, and they don't want to give you more than 10. So if you and your wife borrow money to buy one rental property, that counts on both of your credits. So if you both of you buy 10 properties, Fannie and Freddie counts that you both have 10 mortgages you cannot buy anymore.
Oh, so it can't be 10 and 10. I didn't know that.
Be. So that's the solution.
Okay.
You need to have 10 on your wife and 10 under your name.
Okay. How do we do that?
This way, you have 20.
Okay.
However, in order to, when you're by yourself, your wife's income goes away. So in order to show more income on you, we do a little trick. Because the holding company is partnership, we change the ownership of the partnership. When I need to borrow money from the bank, I have to show more income. So then I change the ownership in the partnership. I own 90% of the company, and my wife owns 10% of the company. So 90% of the K1 comes to me personally as a profit.
Okay.
From the rental properties. And I funnel 90% of the profit comes to me personally, and then I personally go to the bank and get loan for the rental properties. When I get up to 10 mortgages, I switch the partnership. I own only 10%, and my wife owns 90% of the whole of the partnership. Now I start funneling all the profit towards my wife, because she's going to be the one getting the next 10 mortgages. She's going to be the one that needs the profit.
So what's the 90-10 do? What's that about?
Because let's say you're 50-50 partnership in the holding company. You get $100,000 of rents, $100,000 profit rents.
Okay.
If you're 50-50 owner, 50,000 goes towards your wife and 50,000 goes towards you. But when you go and apply for mortgage, the 50,000 is not going to be enough. The bank says you need to show at least $80,000 income personally in order to get financed. So in order to achieve that, you change the ownership of the partnership. You get a bigger chunk, and the bigger chunk of the profit gets reported under your name. And when you go to the bank, you're showing that you're personally making more money from the partnership because you have a bigger chunk in the percentages. And you can switch ownership between you and your wife every year.
God, and is that something like an attorney does, or how do you do?
Yeah.
How do you make those docs?
Operations. Operation agreement. You change that.
Operating. Okay.
And then how your accountant reports the profit. So.
Okay, so just real quick, Oggie, people are coming on and off. So remember, we're talking about how to become bankable, increase your ROI, get more properties on your personal credit. If you're on Zoom, ask questions. If you're on Facebook, Instagram, drop in your questions. We'll get your questions answered. So just want to let everyone know. Also, we're talking a lot about LLCs. If you want a real estate attorney to write prepare your operating agreement in your LLC at a great benefit or discount. If you're an Azreia member, go to azreia.org/LLC and you can get a great deal from Focus Law. So, all right, well, yeah, let's keep it going. I'm going to see if we have a question here on the chat.
So when I told my wife, hey, we coming up with this idea to teach people how to become bankable. She's like, what's bankable? Let me Google it. She's like, oh, it says it's you're a cash cow. Bankable, it's a cash cow. I was like, okay, I'm your cash cow then. But bankable is the ability to get financing from the bank.
So Michaela has a question. Why do you have to have a partnership between you and your spouse? One, and how does this work if you're single?
If you're single, there's no problem then. It's just normal LLC, normal open, normal holding company, normal entity, nor LLC. The reason we have partnership is when you have two spouses, because we want each spouse to have 10 mortgages. That's what Fannie and Freddie allows per person. And in order to have a partnership, we are very flexible on how to report the profit. We can report the profit mostly on one spouse to use it to get financing for this spouse. When that's done, we move most of the profit to the other spouse so the other spouse can get financing individually.
Got it. Understand, Michaela? Hope that was good. Yeah, because if you're single, you're 10 anyways. So if you're a couple, you get limited to 10 versus 10 each. So this his strategy allows you to get 10 each versus stuck to 10.
So the other reason when you're single, once you get to 10, Fannie and Freddie is not going to like you. But then what you can do, you can go to a commercial bank and start packaging these 10 properties. Commercial loans, commercial mortgages and loans, they do not get reported on your credit. So you can buy 10 properties with Fannie and Freddie mortgages, go to a local commercial bank and package the 10 properties into 2 commercial loans, 5 each. And at that point, when you refinance, your credit is clear and you have 0 mortgages under your name. And then you can do another 10.
Then go back to the holding company structure.
Yes. But and then when you go to the commercial bank, then it's a little different over there because the commercial banks want everything based on numbers. They really don't care about your credit. They want to see all your 5 properties together, how much rent, what's the equity, and that's it. They don't care so much about your credit personally. They care about the collateral.
Yep.
You can combine 10, 5, 3x3, but I would probably go 5 with the option of selling one individually. So
when it comes to you get the structure in place, which thank you for sharing, because for me in the legal structure world, my wife and I, man, like it's just error after error. Filing after filing, then you're like, you start hiring professionals. Like first, when you're first getting started, you're like, how am I going to pay a couple thousand to get all structured? So this is very helpful. At least you can take this information to a professional and say, this is what I'm trying to do. So it cuts the trial and errors out sometimes. So thank you for sharing that. I'm sure it took you years to figure that out. Or did you just pay right up front and figure it
No,
out.
exactly the same way like you. You get denied, and then you get goal change, and get denied, and then get restructured, and then headache, and then okay, there's an easy way to do it now. So,
Love it. Love it.
yeah, so it
So
is. But go ahead.
what are some, so, you start getting this, now we have the structure, right? We have an idea of how to set it up. We know we need to go to an accountant or a real estate attorney to create this and figure it out. So now when it comes to a bank, so are you recommending when you have the structure, is your best deal going to be at Bank of America, Chase, or is it a credit union, community bank? Like, what are you recommending when you have your structure ready to go?
Okay, so listen carefully, everybody. Interest rate doesn't matter.
Okay.
How many points the broker is charging you doesn't matter. The only thing that matters is getting it done. Because once you go and become an investor and you have multiple properties, multiple businesses, multiple incomes, 500 pages of tax returns, this is just limited amount of people that can handle that type of a client. So from that point on, when you buy rental properties, you're going to make millions. You should not sweat about quarter point or a point in fees, and these things does not matter. The only thing that matters is getting it done. So get one experienced mortgage guy that understands business taxes, because it's really important. Business taxes, not regular CPA. Business taxes, and pay him well and have him get a lot of loans done for you. So the interest rate doesn't matter, the points doesn't matter. The only thing is the person that's working with you.
You probably struck a lot of chords right there, because that's all we look at. So interest rates.
Everybody's no, you're gonna make millions. Why sweat about $50 or $500 or even $5,000? We're going for the big picture here.
Okay, and you said something pretty impressive there. Not your regular accountant, a business tax accountant. What's the difference?
So CPAs, most of them, they just do regular your taxes and your salary. And once you move into multiple businesses and rental properties, there's a lot of depreciation. There's a lot of pay yourself a salary. There's a lot of things could be moved around. So you're looking very good in front of a bank to get financing, but at the same time, you don't pay a lot of taxes at the end of the year. It's a really interesting balance of being really bankable, showing so much profit, and at the same time, at the end of the year, reduce the tax burden and pay a lot of less taxes. So, for example, a lot of mortgage guys do not know that, but me and you would use depreciation in the rental properties to offset a lot of our income and for the year, so we pay less taxes.
Mm-hmm.
So in front of IRS, we don't make money because we have this huge expense from the depreciation of rental properties. But when we go and apply for a loan, the mortgage guy can use the depreciation as the income on the application.
Wow. So help me understand that. So, there's maybe, I'm assuming you're going along the line of straight line.
So here's round numbers. You get $100,000 in cash flow from your rentals for the year.
Okay.
But because these rental properties are considered businesses, IRS wants us to depreciate them, the buildings on paper. Let's say that just the round numbers. The depreciation on paper is 100,000.
Out of all your properties added up, you can depreciate 100,000, example.
Per year, yes. So you took 100,000 cash in your pocket. Okay. At the end of the year, you have 100,000 depreciation.
Okay.
They offset each other, and in front of IRS, you make zero profit and you pay zero taxes. That's what we do. That's me and you. That's how we do it.
Yeah.
But in front of IRS, you make zero. But when you go and apply in front of the bank, that $100,000 depreciation goes into the income column. It's no longer zero profit, it's $100,000 profit. So
question, if I'm following. So for me here, so the LLCs and the rentals, they make 100,000, but then you're saying I lost 100,000, so you make zero.
That's in front of IRS.
But now I still made the 100,000, but then I depreciated 100. So does the bank look at it like I made 200?
No, they're gonna see it like you made 100,000.
Okay, cool. Just want to clarify. All right.
Yes, not double. It's just what you offset with IRS. It doesn't matter for the bank. The depreciation, it's moved into the income column, and you make 100,000 profit, and you can get financeable. So in front of IRS, we pay zero taxes. In front of the bank, we make 100,000 and we get loan for $1 million.
Got it.
Little things like that will prepare you for the next 2-3 years, because these things takes time, months, years to structure. Because even if you have the cash, eventually it's going to be gone. Putting 25% down payment or buying property cash, you'll be out of cash eventually. And the growth, it's limited if you don't use leverage.
And what's leverage? What's leverage to you?
Bank. Use the bank's money. Bank's money. Because here's how I explain the leverage to regular people to understand. Let's say, Mike, me and you, we have $100,000 each, right? Okay. Cash. We both have to invest in real estate, and we compete to make more money, each of us. You buy one rental property cash, and you rent it. I take the $100,000 and I use leverage with bank's money. I put 25% down payment on 4 properties. So now you have one property, I have 4 properties I own to the bank. Let's say 20 years go by and the price is double. Your one property is going to be worth 200,000. My 4 properties will be worth 800,000. And with about 20 years, the tenants almost paid off my mortgages. So you see how we both started with the same amount of cash?
Yeah.
But I spread the risk between 4 assets, and I made 4 times more money than you. So that's what leverage is, and that's what you have to use. But before that, you have to become bankable.
Love it. And a common thing that's always said in our world, if you want to buy a $100,000 stock, you got to pay $100,000. You're able to get into these deals, whether it's 25% down, if you go FHA, 3.5% down, you're leveraging the bank to get more properties with your money. And the way you're structuring it is awesome, man. So quick question.
Because go ahead.
I just had a question here on Instagram. Are there any realtors who work with wholesalers? Do you do real estate services or just property management?
Oh, I do real estate services. I mean, it depends. Yeah.
Oggie works with investors. Reach out to him. If you come to one of our meetings, they're usually any member that's a real estate agent within Azreia, they probably work. They're investor themselves, so they probably work with investors. Just get on our forums on our website, come to a meeting. They're everywhere. And I like that idea because if you are investing, you want to use a realtor that understands investors. So, yep, awesome. So, all right, I'm sorry, Oggie, let's keep it going. We got about 10 minutes.
I don't know. Let's see if there's any questions, any real life scenarios. Anybody is planning to buy, but they're not sure if they can get financing. Something we can advise them to how to get structured. Just ask questions. Also, another good thing is, in order to be bankable, is to be able to get your equity out of the properties to do a refinancing. So a lot of people don't know, but cash out refinance are not considered taxable event. So let's say you bought a property a long time ago for $100,000, and now it's worth $400,000. You have $300,000 equity sitting in this property doing nothing for you. But most common conception is I have to sell it in order to get the money so I can invest them again. No, you don't do that, because if you sell the property, you're going to pay taxes. So what you do is just do a cash out refinance, because cash out refinance, IRS doesn't want you to pay taxes because you still practically owe the money to the bank.
Yeah.
So you go to a bank, say, hey, my property is worth 400,000. I have a loan for 100. Can you refinance me and give me a loan at 75% LTV? Let's say give me a loan for 300,000, and you pay the 100,000. Then you have 200,000 cash in your pocket that you don't have to pay any taxes on that you can go ahead and invest in real estate again.
I have a question for you from Michaela. If you refinance, when you turn the properties into a commercial loan, so I'm assuming from our last scenario, right? You transfer everything out, clean up your traditional credit history. Does that restart the loan? Or would it be better to get a HELOC?
It restarts the loan. HELOC is going to be hard because banks do not give HELOCs on investment properties. So you're limited on that side of it. So most likely you have to go to a commercial loan. But again, when you restart the loan, just think of it as just the next step in the process. You're going to make millions. Don't think small about, oh my God, I'm going to have to start paying more interest rate. You don't care about that. Just you freeing more yourself to get more options to buy more properties. So even though you're going to pay more interest rate because you're restarting the loan, you're going to make so much more money by buying 5 more rental properties that it's going to offset any type of a increase in paying expenses.
Love it. Yep. And what about, or even like, in your, what Michaela just asked, going from, you have your 10 and you go commercial afterwards, but what if you just have 1 or 2, right? So you'd still recommend refining those and taking
Absolutely.
that cash.
I always recommend cash out refis of course, to a certain level, no more than 65, 70, 75 LTV. That's the max I would refinance, because sitting and having paid off property, it's not a good thing right now in this economy, because we're in a high inflation. In a high inflation, is good to have mortgage debt, because the inflation eats the mortgage. Your payment is set for 30 years, but the money, the dollar is weak, and your salaries keep going up, and your payment is always the same. The rent goes up, but the payment is always the same. So in the high inflation, it's good to have mortgage debt.
Can you explain that? Like when you say the inflation eats the mortgage?
All right. So let's say when you bought a property 5 years ago.
Okay.
And at that time, your mortgage payment, it was $1,000.
Mm-hmm.
Your salary was $2,000, and the rent was $1,100.
Mm-hmm.
So the inflation pushed the rent up, and the inflation pushed the wages up, the salaries.
Okay.
So now your salary is, instead of $2,000, is $3,000.
Okay.
And the rent from $1,100 went up to $1,700.
Okay.
But your mortgage is still $1,000 because it's fixed rate for 30 years.
Got it.
So now you're making total of, let's say, 5,000 cash flow versus 3,000 cash flow when you get the mortgage. And now the $1,000 mortgage per month doesn't seem so big right now. because you're making a lot more money. It's a paper money, but it's a difference. So get a mortgage, 30-year fixed at any rate, because the inflation is going to eat it up.
I love it. Wow, man, this has been very helpful. Before we wrap up here, so if you have questions online, Facebook, Instagram, Zoom, let's get them in. Oggie, man, maybe let us know a little bit about how to get in touch with you. I know we have your phone number and email up here, but if there's any other way.
Easy to just Google my name, Oggie Penev. It's kind of a unique name. It's kind of hard to miss it. And you can call me my cell phone directly too. 602-405-8156. Any questions, I'll be happy to help. Me and my accountant, Peter Diamond, we are putting all this thing we're talking about, the being bankable, into eventually training. We're creating the American Institute of Bankability Experts. So,
and that's what we just covered, like along the idea of what we just talked about today.
Yeah, some of the things that we're going to be helping other investors find out and implement in their business. So it's going to be, it's a nonprofit organization. So, but the American Institute of Bankability Experts, it's going to take a few months to ramp it up. Peter Diamond's coming with a book. I'm going to put some trainings together. So we'll be helping with good information. So
keep Azreia informed, man. There's a lot here. There's a lot more to fix and flipping, landlording, wholesaling, just buying and selling. And, it's easy and the gurus and online, it makes it easy to get rich and all this stuff. But it's like, this is the stuff that helps you get rich and wealthy over time, is being bankable, asset protection, right? Now, once you're bankable and you're buying these properties, how are you going to protect all that, going into trusts and all this stuff? So there's a lot more parts of your real estate business that you have to be educated on. We wanted to bring that information to you, so we're all successful here. So
yeah, we all have to stop trading time for money.
Yeah,
it's investing in the long term, eventually being able to retire and get a passive income.
Yeah, man, that was very valuable information. So that was Oggie, man. He dropped an hour of how to become bankable. The replay will be on Facebook. The replay will be on Instagram. If you registered and you want a copy of the recording, we'll definitely get that out to you, man. So any last words you want to leave, my friend?
So good. Yeah, I'll be happy to help anybody. Reach out. Again, cell number 602-405-8156, or find me on Facebook. I like Facebook. I'm on Instagram too, but reach out. If I don't have the answer, at least I have the right people to direct you to. So people like Mike and so.
Man, I love having you here. Love everything you do for Azreia and all real estate investors across the state, man. So that's it. So I'll see everyone next Wednesday, 12 o'clock, same time, same place, and have a great day.
All right. Thanks, Mike. Bye.
Everybody.